What is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be talking about Upstart stock because in the last year, this company is up 275%. If you don't know, Upstart pretty much is a cloud-based artificial intelligence company that helps people get loans and it helps connect people to banks. Okay. So this company is founded in 2013. Their current market cap is $7.2 billion. And the funny thing is, I just did a video on Lyft stock. Lyft is also a $7 billion company, but wait till you see the difference in the revenue between these two companies. So first off, we're going to take a look at their Q3 earnings report, where their revenue was up 20% year over year to now $162 million for Q3. Okay. However, the problem here is that in last year, they did a total of $513 million of revenue. And in 2021 and 2022, they had great years, $850 million of revenue, but then it dropped off pretty big. And now that the Fed is cutting rates and stuff, it helps their business out. And that's why we see revenue up 20%. But keep in mind how I said Lyft is a $7 billion company, and Lyft is also a money losing company, but they are doing close to $6 billion of revenue. Okay, this company is only doing $500 million. So that makes me think they are very overvalued. Okay, and now we see some um, companies raising their price targets to $85 and $87. Well, the stock is almost there. And so, probably before it gets there, I think it's going to have a drop. It's going to have a fall because $7 billion is a lot for a company that loses money and that is only does revenue of $500 million. Okay, the net income is they lost a record amount of money in 2023, $240 million. Now, if we go to the most recent quarter, it looks like it's improving a little bit, but they still got long ways to go here. Okay, we need consistent profitability on the bottom line. That's what we're looking for. Because again, when the company is losing money, it leads to other problems with the stock, such as them issuing more shares, right? They can't buy back shares. They can't offer a dividend. They can't do a lot of things. They can't reinvest in the company when you are losing more and more money every single year. So that's what we're looking for here. The forward PE is 440, if that puts things into perspective a little bit. As for the price to sales, we are pretty much at a record high right now of 8.7 times sales, when, as you can see, in the last couple of years, the stock has traded anywhere from a 1 to a 6 or 7 price to sales. Okay, so we're approaching a 9 right now and a 440 PE ratio, which is insane. So, I mean, I think this company should be valued at like maybe $1 billion, maybe something like that. Now, the interesting thing here is that yes, they have a lot of potential. It's a very interesting, innovative business model. They're using AI, and they do have, maybe 5 years from now, they have a great profit margin and consistent income and revenue. That's a different story. So you can, invest in it based off of that thesis, but it's years away. It's if everything goes according to plan, if they execute right. It's all a bunch of what ifs. So that's why I don't think the stock deserves that rich of a premium. And it's just kind of ridiculous that it's trading at 440 times earnings. I thought Lyft trading at a $7 billion valuation was kind of too much, let alone this company that's doing a tenth of what Lyft is doing for revenue. So that's pretty much Lyft stock for you. Next year, analysts have them doing to see it to believe it. This year we got revenue pretty much break even, and the next year close to 31% revenue, $730 million of revenue. It's a step in the right direction, but it's still barely it does not justify a $7 billion valuation. So those are my thoughts for Upstart. I like the business model, I like the idea, but the valuation is just out of control, and I'm not interested in buying the stock anytime soon. So thank you for watching. I will see you in the next video.